All right, so you're here for another deep dive, right? And today we're going to try to figure out if a dip in a major growth stock could actually be a signal to buy.
Interesting question.
Yeah, so we're looking at this Motley Fool analysis that came out actually just yesterday, March 25th, 2025. And the title is, This is What Caught Our Eye. One growth stock down 12% to buy right now.
Oh, wow.
Yeah, it definitely makes you want to take a second look.
For sure.
So we're going to try to figure out what they're seeing in this.
Yeah, what's the smart money doing?
Exactly. So the stock we're talking about, just to be clear, is Amazon, ticker symbol AMZN. Now, as of yesterday, March 24th, this company, a $2.2 trillion company, has seen its stock price drop about 12% over the past 3 months. And to really show how volatile it's been, it was down another almost 4%, 3.58% yesterday, landing around 203.24 a share. So this is a stock that's moving.
Yeah, no, for sure.
So what's going on? Why is there so much downward pressure on a giant like Amazon?
Well, the Motley Fool piece points to the whole economic picture right now, especially the whole thing with President Trump's tariffs on imports.
Right.
And if you're following your investments, the worry here is that classic domino effect. Tariffs lead to inflation, inflation squeezes corporate earnings, and then ultimately, people just have less money to spend.
Consumers close their wallets.
Exactly. And this is the kind of uncertainty that really spooks investors, especially in growth stocks.
Yeah, growth stocks tend to be valued on their future earnings. So if there's any kind of question mark about the future, growth stocks can see big pullback.
Yeah, and we've seen this happen, to a certain degree in the NASDAQ Q composite. It's in what they call correction territory, which is just a fancy way of saying it's pulled back significantly from those recent highs.
Yeah, makes sense. So basically, when the economy gets a little rocky, investors get a little nervous. And that nervousness often hits growth stocks the hardest. Exactly. But here's the interesting thing, and the Motley Fool article really makes this point well. These periods of uncertainty can actually be a good thing for certain investors.
Oh, interesting. How so?
Well, because it can create an opportunity to buy shares in really strong companies, companies with a lot of long-term growth potential,
Right.
but at a price that's maybe more attractive than when everybody's feeling super optimistic.
Okay, I see. Kind of like buy low, sell high.
Exactly. So the whole argument of this piece is that this recent 12% drop in Amazon's stock price might be one of those opportunities.
Oh, interesting.
So let's look at why they think this.
Yeah, let's break it down.
All right, first of all, they start by pointing out something that's hard to argue with. Amazon is just everywhere in our lives.
It really is.
Think about it. Ordering groceries,
Yep.
streaming your favorite shows, grabbing those everyday essentials. Chances are you're using Amazon for at least some of that stuff.
Probably all of it for me, if I'm being honest.
Yeah, me too. And what's really impressive is just how diverse their business is. It's not just an online store anymore.
Right. It's way more than that.
It's way more. I mean, their Prime subscription, that's become this whole ecosystem.
Oh, yeah, totally.
You get live sports, streaming movies, that free 2-day shipping, sometimes even same day.
It's hard to imagine life without it, almost.
I know, right? And the article makes a good point about the stuff that Amazon actually sells, like the core goods, your household staples, groceries, that kind of thing. People need that stuff no matter what's happening with the economy.
Yeah, that makes sense. Those aren't really luxury items that people cut back on when money's tight.
Right, exactly. And all of this, according to the analysis, has led to a really strong track record for Amazon in terms of earnings.
Right.
They're making billions in revenue every quarter.
Wow.
But even more important, the return on invested capital is growing. And for those who might not be super familiar with that term, why is a growing return on invested capital so important?
Ooh, that's a good question. So return on invested capital, or ROIC, as the finance folks call it, basically tells you how well a company is using its money. Like how much profit are they squeezing out of every dollar they invest back into the business.
Got it.
And what's interesting about Amazon's growing ROIC is that it's not just about making a profit. It means they're getting more and more efficient at turning their investments into, well, shareholder value.
Right.
Which is pretty impressive for a company this size, especially with all these huge ventures they have going on, like AWS, their cloud computing business.
Right. So it's not just about profitability. It's about how effectively they're using their resources.
Exactly. And there's this chart, actually, in the article from Y-Charts, and it really shows this upward trend in their ROIC. And it just makes it super clear that their big bets on things like e-commerce and cloud computing are actually paying off.
So their strategy is working.
Yeah, it seems like it. This ROIC trend is a really good sign for the long-term health of the company.
Interesting. So even with all this good news, the stock price has still taken a hit. The Motley Fool article points back to those worries we talked about earlier, especially the potential impact of President Trump's tariffs.
Right.
So how could these tariffs actually affect a company like Amazon?
Well, the worry is kind of twofold. On one hand, tariffs could mean that the goods Amazon imports and sells become more expensive, which would obviously cut into their profits.
Yeah, that makes sense.
And then there's the worry that if those higher costs get passed on to consumers, people might start tightening their belts and spending less on the non-essentials they might normally buy from Amazon.
Right, like those impulse buys.
Yeah, exactly. So it's a potential hit from both sides, higher costs and lower demand.
Ouch.
Yeah, not a good combination. But the article does offer a pretty compelling counter-argument. They say investors might be overlooking something important. Amazon's response to past inflation. They specifically talk about how Amazon completely overhauled its cost structure a couple of years ago when inflation was a big issue.
Oh, interesting. So they've dealt with this kind of thing before.
Exactly. They didn't just sit there and take it. They actively looked for ways to make their operations leaner and more efficient.
Okay, so what happened?
Well, the article points out that after actually reporting a net loss in 2022, they bounced back with a net income the following year.
So they turned it around.
Yeah, they did. And that shows that they can adapt. They can manage their expenses even when the economy gets tough.
That's encouraging.
It is. It shows a certain resilience, I think.
Yeah. And it sounds like these cost structure improvements aren't just a thing of the past. The article mentions some pretty impressive financial results from last year.
Oh, really?
Yeah, revenue grew by 11% to a whopping $638 billion.
Wow.
And their net income almost doubled to $59 billion.
That's huge.
Yeah, it's not just small gains here. This really points to the strength of their core businesses, and it suggests that those cost-cutting measures from before are still helping them navigate the current economic headwinds.
Makes sense. They learned from experience, and they're applying those lessons now.
Right. And they give a really concrete example of how they're keeping costs down, talking about their use of AI in their fulfillment centers.
Oh, yeah, the robots.
The robots, exactly.
I always find that fascinating. How is AI actually helping them with efficiency in those giant warehouses?
Well, think about it. These warehouses are massive, like the size of small cities. AI can help optimize everything.
Okay.
Like the routes those robots take to pick and move products, manage inventory so they're not storing more than they need to, even forecast demand so they have the right products in the right place at the right time.
Wow, that's pretty sophisticated.
It is. And for a company as big as Amazon, even small improvements in these areas can save them a ton of money.
Right, because those small improvements are happening at such a massive scale.
Exactly. And it's not just about what's happening inside the warehouses. The article also mentions how Amazon is changing where they keep their inventory.
Oh, interesting.
So instead of having everything in a few central locations and then shipping it all over the place, they're putting more inventory closer to where people actually live.
Oh, I see.
And this has a direct impact on their cost to serve, which is basically how much it costs to get a product from their warehouse to your door.
Makes sense. Shorter distances mean lower shipping costs.
Exactly. And when fuel prices and shipping rates are all over the place because of the economy, having more local inventory gives them more control over those costs.
It's a smart strategy, especially in uncertain times.
Right. Now, we can't talk about Amazon without talking about AWS, their cloud computing business.
Right, the behemoth.
The behemoth. And the Motley Fool piece really emphasizes how strong AWS has been, even during that last period of high inflation.
Oh, yeah.
Yeah, they point out that even when businesses were cutting back in other areas, they kept spending on cloud services through AWS.
Huh. So basically, cloud computing is becoming essential for businesses.
It seems that way. And that makes it less vulnerable to those short-term economic ups and downs.
Like a utility, almost.
Exactly. And looking forward, the article sees even more potential for AWS, particularly with the whole rise of AI.
Oh, right, because everyone's trying to get on the AI bandwagon.
Exactly. As more companies invest in building their own AI capabilities, they're going to need powerful cloud infrastructure to support it all.
And that's where AWS comes in.
Right. And the article mentions that AWS already has a whole suite of AI products and services ready to go.
Wow, so they're ahead of the curve.
They are.
Yep.
And that's contributing to their already impressive $115 billion annual revenue run rate.
That's just mind-boggling.
I know, right? So AWS is not just a stable part of their business. It's poised for some serious future growth.
Very interesting. So we've talked about the challenges Amazon's facing and their strategies for dealing with them. Now, let's get to the part that investors really care about.
Yeah.
What does all this mean for the stock?
Okay, so the Motley Fool's argument is that the current valuation of Amazon stock is actually really attractive.
Okay.
So right now, the stock's trading at around 30 times its expected earnings for this year. But here's the thing. Just over a year ago, it was trading at over 50 times forward earnings.
So it's gotten a lot cheaper.
A lot cheaper. And that combined with the underlying strengths of the business and their growth prospects, especially with AWS, is why the Motley Fool thinks this could be a really good time to buy.
Oh, okay. Like a buy low moment.
Exactly. So even though the stock's been down recently, this analysis is basically saying, don't panic. This might be a good opportunity.
That's a pretty bold statement.
It is, but they make a strong case.
Yeah, they do.
So to sum it all up, even with the recent market jitters and that 12% drop in stock price, the analysis paints a picture of a company that's not only a huge part of our lives, but has also taken steps to control its costs, is seeing massive growth in its cloud division, and is now trading at a much more reasonable price.
Right. So despite the short-term challenges, the long-term prospects for Amazon look pretty good.
Exactly. And the article acknowledges that there could still be some bumps in the road because of the economy. But the fundamental strength of their e-commerce and cloud businesses suggests that they're well positioned for continued growth over the long haul.
They've got a solid foundation.
They do. Okay, so let's bring it all back to you, our listener.
Right. What's the takeaway here?
What should you take away from this? The main point is this. Uncertainty in the market, often caused by things like tariffs, can really shake things up, even for strong growth stocks like Amazon. But these volatile periods can also create opportunities for long-term investors.
Okay.
And this analysis argues that Amazon is well prepared to handle these challenges. They've already taken steps to be more efficient, AWS is going strong, and now the stock is trading at a more attractive price.
Right.
So it might be a good time to consider adding Amazon to your portfolio, especially if you're in it for the long haul.
Makes sense. But here's what I'm curious about. Amazon is already so integrated into our lives.
I know, right?
It's hard to imagine it getting much bigger.
Right.
But they're also investing heavily in things like AI, which is going to be huge in the future. So it makes you wonder, could Amazon's growth in the coming years surprise even the experts?
That's a great question.
Like, what new markets or innovations are they going to tap into that we haven't even thought of yet? What's going to drive their growth over the next decade?
It's exciting to think about.
It is. It really challenges us to look beyond the headlines and consider the long-term potential of a company that's constantly evolving and shaping the digital world as we know it.
Yeah, it really does. So much to think about there. Thanks for joining us for this deep dive. Hopefully this has given you some food for thought.
Absolutely. Always a pleasure.
And until next time, happy investing.
Happy investing, everyone.